So this is a very special episode for me. This is our 100th episode. I was challenged a long time ago and told that I probably wouldn't get through 5 or 6 episodes. So here we are. So it's the final episode for 2025. And as we close this year out, we'll be watching closely for a potential Santa Claus rally, but we're also watching some potential turmoil coming up, and specifically an area that I call the chopping block. So we're going to dive into that. My name is Brian Cannon, and welcome to Markets in 5. All right, so we're going to dive into a chart on the S&P 500 and look at really kind of a year in review. What's happened and where are we? So we started out the year with a bang. So the market just kind of took off here in early January, February, got to a certain point and just reversed course. And then it was a pretty steep, heavy, consistent selling and a big drop all the way into April. Found a bottom and then started to rifle off the bottom. So that's good. Broke out in July and really didn't look back. However, generally what the market does, when you have a large kind of run or consistent kind of gain here, usually there's a period of consolidation. So the market just doesn't continue to shoot for the moon. So it'll shoot off the bottom, rise for a good bit, and then begin to consolidate those gains. And so that consolidation generally comes in the form of kind of a resistance where it can't quite break above, and support where it just buyers come back in and start to hold. But there is this in these two pink circles here, you can see heavy days of downside selling until it found support. So here it found support on the 50-day moving average, and and over here it found resistance at the 50-day moving average. However, came down and double bottomed. So now it's this double bottom, which has now created this support level, and it's also double topped in the fact that it's hit this resistance and can't break through it. So we're rolling over a little bit as we speak now. We did just this week break through both the 20 and the 50-day moving average, so we've got to watch that. And we also did have a break of the RSI. So we've got a couple of things that we're watching very closely to determine if we start taking some of the risk off the table. But ultimately what we'll be looking for is the support level down here to hold. So as long as we can do that and remain in this sideways zone, we won't get too cute. But what we are looking for, either a breakout to the upside with some good news or a breakdown to the downside. And then we would look at this support level. We'd want to make sure that we hold that level. So that's really what we're watching in this chart. Now, when we look at the S&P 500 on a weekly basis, we tend to take some of the noise out of the mix. And so even though we're rolling over a little bit here, we're still very much in this uptrend. So we don't want to get too concerned and get too trigger happy on making gut calls, but there is a level that we would anticipate it to hold, and if it doesn't, then the potential uptrend could be at a rollover level. We're not there yet, but again, something we're watching closely. And then finally here on this 5-day moving average versus the 100-day moving average, again, we want that 5-day moving average to stay above that 100-day moving average. Generally, when that happens, even though there's volatility, the market's still trending upward, and we are definitely trending upward right now. So again, if we break this upward momentum, this trend line that we've got down here, that would be another sign of caution. And it's certainly if the 5-day moving average takes out the 100-day moving average, that would be another sign that we need to be very careful of. This is an interesting chart that really illustrates the fact that we, even though there's a lot of volatility, you can see by the yellow dot, the downside pull of the market on an intra-year basis relative to the blue column chart that essentially shows you where the market ended. So there's plenty of years where we have downside pulls that end up positive on the year. So and you can see by this chart that the market definitely goes up more than it goes down. So we want to be very cautious on making gut calls, but certainly when that trend rolls over and all of our indicators flip, then it's time to take protective action. But until that really happens, we don't want to get too far ahead of it. So in wrapping up, you can see that we've got an area of consolidation that will either break up or break down. So we've got to watch that area very closely and act accordingly. We'll continue to monitor that. And again, I want to thank you for joining me on this journey, making it to our 100th episode. So I wish you all a very Merry Christmas, and we'll see you in the new year with the next Markets in 5.